Well, we just had an election and now we know the outcome. Republicans have swept the House, the Senate, and the White House, and this means big changes are coming in 2025 on your tax return. Everyone is going to be affected, from individuals to small business owners, high income to middle income. Your tax return is going to be different coming in 2025. I'm going to break down the differences, the pros and cons that you need to know. I'm Matt Sorensen. Let's build wealth. All right, now the first thing you need to know is there's something called the Tax Cuts and Jobs Act that Trump and Republicans passed almost 10 years ago that expires in 2025. So there's all these individual and small business tax cuts that we're enjoying today that are about to go away starting in 2025. Now, Trump and the Republicans have promised to extend a number of these tax cuts, and they have promised to add some other cuts. So I want to go over that and what you should be expecting. 2025, as far as politics and legislation goes, is going to be all about tax cuts. So it's important that you know what to be expecting and how this is going to affect your return, how you can strategize for it. Now, a big one affecting everyone is the federal tax rates. No matter what bracket you're in, this is going to affect you. It's not just high income people that'll be affected by this. Now, the highest rate is currently 37%. That's going to expire in 2025 and bump up to 39.6%. But it's not just high income people. The 12% bracket is going to go away and become the 15% bracket. The 22% bracket is going to turn into the 25%. The 24, the 28. Middle income, lower income are going to get affected by this too. Now, Republicans have said, hey, in 2025, we're going to extend these. We're going to stay at the lower rates right now, so they're not going to bump up after 2025. Now, the next tax that's going to change, again, unless Republicans extend these in 2025, is the standard deduction. This is something you get to take on your tax return to say, hey, I'm not itemizing all my expenses, my charitable giving, my mortgage deduction. Just give me the basic standard deduction that reduces my taxable income so I pay less tax. That's the standard deduction all of us have the option to do on our tax return. Now, this was doubled back in 2017 under the Tax Cuts and Jobs Act, but again, it's set to expire. So right now, an individual can take a standard deduction of $14,600. If this is not extended, it's only going to be $8,300. For married couples, the standard deduction is $29,200 right now. Now, this tax cut's going to expire, and if Republicans do not extend it, it's going to go down to $16,700. What this means is you will have more taxable income because you get less of a deduction you're going to take on your tax return. Now, again, Republicans have proposed to extend this as well, and this will go into the extensions and likely this Tax Cuts and Jobs Act 2.0 bill we're expecting to see in 2025. Now, the next big item for 2025 is the state and local income tax deduction, sometimes called SALT. This is a deduction you get to take on your federal tax return to say, hey, I paid $5,000, $10,000, $100,000 in state and local tax. Let me take a deduction on that to reduce my federal taxable income. Now, back when the Tax Cuts and Jobs Act was passed, back in 2016, 2017, they capped it, and the federal government said you can only take a deduction up to $10,000. This cap hurt a lot of people that were in high tax rate states. Now, what has been proposed now on the campaign trail by Trump and a lot of Republicans is we actually are not going to extend the cap. We're going to let the cap go away. In other words, you'll be able to deduct whatever state and local tax you pay. The $10,000 cap will likely go away. This is again proposed and what has been said on the campaign trail by many Republicans, including Trump. Now, this is one that actually has a lot of bipartisan support by Democrats that represent districts or states that have a high state or local income tax because it affects their constituents. So this is one you're likely going to see passed in the 2025 tax legislation. Now, the child tax credit is a big one that affects a lot of people. Right now, you get a $2,000 tax credit per child under the Tax Cuts and Jobs Act. This is set to expire in 2025 and what is going to be on the table to extend. Now, this has bipartisan support from Republicans and Democrats who want to see this extended. If it is not, it's going to go down to only a $1,000 tax credit per child. And a lot of people are going to miss out on it because it phases out at only $75,000 of income for single and $110,000 of income married if this is not extended. Right now, a lot more people get to use it at the $2,000 level because the phase out is at $200,000 single, $400,000 married. So it applies to a lot more taxpayers right now. It has double the value. It is likely we will see this extended in the 2025 tax package. Now, the last one here at the individual level is the estate tax exemption. I'm going to come to small business deductions here in a moment. There's a couple of important ones there. This is the last one on the individual level. The estate tax exemption right now is $13.6 million. What that means is when you pass away, you can pass on $13.6 million to your family or your heirs without a federal estate tax. This means the family business, the family farm, whatever it is that you've built and grown can pass down to the next generation without a federal income tax. tax. Now, the federal estate tax is almost 50%. So if you do have to pay this federal estate tax, it's nearly 50% tax. The federal government's going to take half of your assets if you're subject to the tax. Now, the exemption, if this is not extended in the 2025 legislation, after 2025 is going to go down to $5 million. You will only be able to pass on $5 million to your heirs, your family members, without paying estate tax, again, if the estate tax exemption is not extended. Now, for you small business owners, there's a couple of really important deductions. First of all, I want to say this: big business in the Tax Cuts and Jobs Act, C corporations got a tax reduction from 35% for corporate tax down to 21%, and that was made permanent. The small business tax cuts and the individual tax cuts were not made permanent. They were put on this 10-year timeline that now we're facing expiring in 2025. So for small business owners, there's two I want you to know about. The first one that's critical for small business owners, whether you have an LLC or an S corporation, is called QBI, Qualified Business Income Deduction. This was a 20% deduction that small business owners get to take off of their taxable income. So if you're a small business that makes $200,000, you get to take a 20% deduction and reduce your taxable income down to $160,000. This is a huge benefit, creates huge tax savings for small business owners. This is set to expire. Now, again, this is part of the legislation Republicans have said they want to extend, and so it is likely this will be included in the 2025 Tax Cuts and Jobs Act 2.0 package. Now, another tax cut that was really important for small business that is again set to go away after 2025 is bonus depreciation. What bonus depreciation was, it was a way that you could expense the full value of a vehicle or equipment in your business right when you bought it. Typically under the tax code, if you bought a vehicle or equipment, you had to write it off over time. Maybe it was over 5 years or 10 years. So if you bought equipment worth $100,000, you may have been forced to take only $10,000 a year over 10 years to expense it. But under bonus depreciation, you were able to accelerate this and say, hey, I get to take a full $100,000 deduction in the year that I buy it. This was a huge incentive for small business to grow, to buy more equipment, vehicles. It spurred a lot of economic growth. And this is one that is likely to be included again in the 2025 tax legislation to go back to allowing a higher level of bonus depreciation. Now, it's important to know where tax policy is going, right? We want to skate to where the puck's going, not to where it is. But there's a lot of tax strategies you should be implementing right now, no matter what's going to happen next year in Congress. Are you using an S corporation properly? Do you know how the LLC works? Are you maximizing retirement plan contributions? Are you taking all the appropriate deductions in your small business? This is the stuff I'm talking about every day on my channel. Please make sure you're subscribed for more tips on how to save taxes, protect your assets, and grow and build wealth. I'm Matt Sorensen. We'll see you next time.